All right, folks, we've got Nick Shawn from Mission FX here back on the Trading Nut podcast, YouTube channel, whatever you want to call it. We've got the Build That Bot show up for you next. We've got this. We've got Nick on the show. We're basically going to come up with an automated way to trade Nick's strategy. Now, how we're going to do this, we don't know yet. It's going to be a bit of a mystery. You're going to find out how we try and make it mechanical, and something that we can actually build into a robot. I'm going to build that into a robot, and we're going to see what happens when we run it through some currency pairs and whatever else we decide to trade it on. So, Nick, welcome back to Trading Nut. How are things with you?
Things are amazing, mate. How have you been?
Look, I've been great. The weather's been pretty average, but a broken rib, the shoulder's gone, the knee's gone, but other than that, it's fantastic over here. So yeah, it could be better. It could be slightly better. Now let's jump into the price chart and have a look at sort of maybe you start by sort of walking through how we'd start thinking about automating something, and then we can go from there and work out a way that might be more easy to build for me.
Yeah, so let's look at some of the simple fundamentals, just the core concepts of my trading system. I'll break that down because they're pretty simple. One of the most important things in the way that I start is that I want to see a clear direction. So I want price to be in a clear trend, or I want the momentum to be either clearly downwards or clearly upwards. Anything that's going sideways in a range, I would not trade. So if we're going to be systemizing that and putting that into like some sort of code to like code a software or an algorithm or like an EA or indicator or whatever, we want to make sure that that price is not in a range at the time of the trade. Otherwise, there's no trade to even begin with. So price has to be in a clear direction. That's the first thing. The second thing that I wait for is for a break of structure. So a break of structure is when, let's say that price is going in a downtrend and it starts hammering into a support level. I want to see price break out of that structure. And then on top of that, it needs to come back and retest that structure. My whole trading system is pretty much a break and retest of a horizontal level within a clear trend. The third thing is that on the retest of that broken structure within a clear trend, let's just say that this was a break of structure and price came up to retest it, I want to see price start to push away from that level and start rejecting prior to making a trading decision to take a trade. In this case, it would be like if price was in a downtrend going downwards and we had a break of this structure right here, a retest and price starts falling away, this would then be a sell to then target lower lows or the previous low or whatever. So that's essentially it. It starts with a clear trend, it starts with a clear break of structure, and then it starts with rejection on the retest of that structure. Let me give you an example and then I'll hand it back to you, Cam. An example would be we had a lot of downwards momentum here on USD JPY whenever this was, back on June 8th, June 7th, June 8th. There was a lot of downwards momentum. So what I do is I wait for structure points to be broken. So for example, this previous low right there, that is a structure point. Price broke through it, came up, looks like it retested it twice, here and then here, before falling. What did price do after that? It came and broke a new structure point. So a new low right there. There was support established right there when price bounced. Price broke below it, came up, rejected that area, found some resistance, then started to fall away. And then you just keep doing this over and over, and I just trade breaks and retests during clear trends, like on horizontal levels. So that's my trading system, and I guess now we can sort of dive into what we'd have to do next. What would we have to do next to systemize this?
Okay, look, it's probably going to be one of these ones on the more difficult side in terms of trying to break it down. So let's work on the first thing, which is getting that trending market, or that market that's moving in one direction. Now, if you jump back to a price chart, I mean, there are a few things I've got in my mind that we could do. So we could use like a moving average crossover, or a number of moving averages crossing over. The only problem with that is you're going to find that it might be a little bit laggy. So by the time you get the crossover, that trend may be well and truly established, unless you do a sort of tight one. So what we could do is we could do like a moving average crossover, which had crossed over for it, which is quite tight, but it had crossed over and not crossed back for a certain number of bars. That's one thing we could do. So let me just make a note of that. MA crossover with the number of bars. So if you put on, like on that chart, if you put on the let's say the 13 and the 21 EMA or something like that. Let's see what that looks like.
So the first one we're going to do like what? You said 14?
Yeah, 14. Let's just try 14. Yeah, that's fine.
So 14.
And we can make these like a variable and see what works better and what doesn't. And maybe the 21 or something like that. So it's quite tight. Okay, and then like, so you can see here.
All right, so I'm going to change the 14 is the red, and then this other one right here, what did you say this one was?
Let's make it like a 20 or a 21 or something, like 21 or something. Yeah.
All right, so blue is the 21,
yep.
and then the 14 is the red.
Okay, so you can see there that it's a crossover at the top, and if you have a count of how many candles after that crossover, so what we could do is say, okay, once it crosses over, how many candles before it crosses back before we go, okay, look, you know, it might be, say, I mean, it looks like there, if you're drawing that level where you drew that level, where it crosses over, if we count how many candles from that cross before we've got a valid trend. So when would you say it's a valid trend after that cross?
So let's count 1, 2, 3, 4, 5, 6, 7, 8. I'd say after 8, because this candle right here is pretty, that one right there is pretty significant of like a clear trend. So in this case, it's been 8.
Okay, so let's just say, why don't you go back to, just scroll back in time and let's see if we can find another time where this might not be valid or where this is valid.
So here?
Yeah, yep, that's pretty good. That first cross there. So
okay, so yeah, so what are we looking for?
So we're looking to see if 8 is the magic number. Basically, if you go back probably 10 bars and see that cross below.
Yeah, here?
Yeah, that one there. So if you go 1, 2, 3, 4, 5, 6, 7, 8, so that's still valid, at which point, what would you be looking at? You'll be going, well, that's just clearly not a trend, is it?
I would say this is more of a range. So yeah, it would depend, but it looks like, just from kind of glancing back here, it looks like this sort of would be kind of wishy-washy and wouldn't really be as black and white for, I guess, trend establishment.
Yeah.
Is there a way that we could say, hey, if price has been below both moving averages for a certain amount of time, or we could even say if price has been below the moving averages, below one moving average for a certain amount of time, is there a way that we could define a trend like that?
Yeah, so, okay, cool. That's how we fix that problem. So we now say it's got to be an X number of candles, and it needs to be below or above the EMA for those 8 candles or whatever it is, and we can just make that a variable. So
okay, so let's see, what kind of settings should I change the moving average to? It's at 21 right now. Do you think 21 would work, or do you think it's...
I mean, we can toggle these. I'll make them a variable and go through various combinations to see which ones work.
Okay.
But yeah, if we use that as a sort of way to define our trend, so we've got price staying above or below the trend lines, and also you've got a certain number of candles before you'd go, yep, that's a trend. So we could potentially even say that it's moved away from that cross by X number of pips would be another way to do it. Do you think that might work? So it's actually...
I think that pips would be contingent based on the currency pair, because a currency pair like GBP New Zealand dollar moves very fast. Currency pair like, I don't know, USD CHF or EU or UJ moves slower than something like that. So I think I think bars would be a good metric to look at to identify that.
Okay. And what about would ATR be better? So like
to be honest with you, this may sound very noobish, but I'm not too familiar with ATRs.
Okay, so ATRs basically is just like the range of the bar for X number of bars in the history, and there's some sort of average calculation that goes on. It means that instead of using pips, you're using something that's related to the way that currency pair is moving in the current time frame.
Better,
yeah. So we could we'll put that in as an option. So ATR distance from crossover. Now, what about this break of structure? So as we're going down that sort of first trend that you highlighted, and that first break of structure, or the first structure that you had there, what we could use is potentially a fractal point. And you know, fractal where you've sort of got you've got this sort of turning point. I can see one other fractal there which is higher up, but that would be like a fractal turning point at that point. And then we'd just record that and say, okay, we've got that fractal turning point. Now we're waiting for price to come back and break that. Well, A, we're waiting for price to move away from it, clearly. And then B, we're waiting for price to come back and break through it before looking at entering a trade. So there's sort of two things there. I mean, can you think of any other way to sort of easily identify that pullback that's not an indicator?
Is there a way you can use a tool such as maybe Fibonacci to kind of like determine, like, you know, okay, price has made an impulse like down or upwards, and then it has retraced after that impulse to, you know, whatever specific area, whether it be like a Fibonacci level or a structure. I just don't know how you would identify a structure to like an algorithm or EA based like software, so that way it can like see it.
Yeah. The fibs can, you can do it, but the issue you've got is, where do we draw the fibs from? Where would you draw it from?
Yeah, because there could be a bunch, like it'd be like here, and then you could look here, but then you could also use this right there, and then it would all be really confusing. So I think as long as we got the first part right, and that's the most important part, is making sure that there's a clear trend. Now the next thing is essentially, if we're being like more, I guess, dynamic and abstract with the trading system, like, yes, it is a break of structure. It's a retest of that structure for then a continuation. However, what we could say is like, hey, let's identify the clear trend. Let's make sure we're trading with that trend. And then we'll just wait on pullbacks into, like, for instance, like the trend or whatever. So one of the things that I've noticed right here on the chart is that as long as price has been, for instance, below this moving average right here, you can see how it comes and like tests the moving average and then comes down. So what you could do is experiment with like the moving averages and see, okay, whenever price pulls down from the moving average, we have like, you know, price moving like downwards, for instance, like for this move down in here. So price moves down, and then for that pullback, naturally, if we're not using indicators and not a system, we'd just be looking at the chart to see what was the previous price. We're just looking for a retest. However, in this system, if we're trying to like weed out the discretion and make it more systematic and structured, we could say, okay, price has moved away from the moving average to like the downside, and it's just been like going far. Now we want price to come back in towards that moving average and potentially even just like retest the moving average. It won't always work, because like there's this instance right here where it doesn't work. But if there's a way where you could like identify and say, like, hey, this is the moving average. So after price is in a clear trend, which we can identify by however metrics you want to do it, you know, like, hey, if it's been above or below the moving average for a certain amount of candles or something like that, you could say, okay, whenever price comes back to retest that moving average, a trade could be placed right there with the stop loss above or below the previous high. Because if price is going to remain in its trend, then the chances of it breaking that previous low or high structure point is very unlikely. So let's start with that. Let's start the moving average. We identified the trend, and then seeing a retest for the moving average. What do you think?
Yeah, I think that's fantastic, and you can see it retesting it there. So do we need to validate that in any way, shape, or form, such as like price needs to have come? So with the retest, so what could happen is it could go down and just touch the moving average, but not do a full retrace, if you know what I mean, and sort of break through it. What I'm trying to say here is, I'm trying to find an example that's already on the chart there. I can't see it. There is no really good. It actually looks pretty solid when I'm looking at it. I think that's probably all we need, really. Yeah, I think that's all we need. So it comes back, retest the moving average, and then you take the trade. So the high that you would put your stop above, where would that be? Can you just highlight that?
That's the thing. So you have to identify that and then have it like programmed in as a metric that the algorithm or EA or whatever could read. So for instance, I would put my stop loss above that right there. So if I were taking this I would take it based off discretion, like, hey, is it rejecting it? Obviously, like a trading system, unless you have some super crazy machine learning AI like that can like learn, um, you can't have it like read, oh, is it rejecting first? So with it with a systematic like trading system, you'd have to have it enter as soon as it touches that moving average,
Yep.
assuming that the first threshold of it being in a trend is already there. So I would just place my stop loss like above the most recent high. The thing is that you'll run into is if there's like a bar like here and then here and here and here,
Yeah.
like you'll have to figure out how to define like what is the most recent high. It could be like the last time it touched the moving average perhaps, but you'd have to figure out how to put that in there.
I think that's where we might be able to use the fractal. So what we could say is, I mean, that we can, yeah, you're right, it could be any of those candles, but if we say the last fractal high for that time frame, in this case, that would be that what you've just highlighted there.
Yeah.
That one there, yep. So I think that that would work. That would work. So the stop would be above last fractal high.
If yeah, you'd have to of course code for like the uptrend and the downtrend, but that would be it. It'd be very simple to code for. It's just like, hey, previous high, this is where the stop goes if we're in downtrend, and then previous fractal low if we're in uptrend.
And so then when, so you're saying that you mentioned the entry would be a push away from the moving average, or you're saying let's just enter it when it taps the moving average?
Ideally, you want to use a little bit of discretion to say, hey, is it rejecting on the retest? And me, it'd be a retest of a horizontal level. For this case, it would just be the moving average. But since it's you'd literally have to have like AI machine learning to be able to teach it, hey, what does rejection look like?
Yeah.
Get a huge sample size. So in this case, I think just to simplify it, unless you have access to like Google's AI tracking or something like that, then you should just say, hey, let's enter right at the moving average, assuming we're already in a trend, because we're entering right there saying like, hey, this is a pullback. This is a good price to enter. If we're going to continue in the trend, we will pull down away from the moving average. If we don't continue in a trend, we'll go and take out the next previous high. And at that point, the market is likely already starting to try to shift into a new trend or going into a range, which in that case, we wouldn't want to be in a trade anyway. So it would be good to get stopped out of that. So I would say as soon as it hits the moving average.
Well, one thing we could do, yeah, so that's we can definitely do that. One thing we could do, just so you've got this in your mind as a potential, I suppose, way to confirm, is we could say if there's a wick in the moving average and price closes below, in this case, the moving average, then there's two ways we could do it. We could either enter a market order, but if that was a bearish candle where it first sort of penetrated the moving average, then your entry is going to be a lot further down where it currently is. But if it was so if it was a bullish candle, that's fine. If it was a bearish candle, you're going to be close, further away from where your current entry is. But you could put a market order at the whatever the I can't tell if it's a bullish or bearish candle, but the top part of that where it either closed or opened, that last candle, it must be a bullish candle. So you could put it at if you move down a bit, just you could put a market order, so like a limit order. Yeah, so that last candle that penetrated the moving average.
This here?
Yep. So once it closes, if it closed as a bearish candle, which in this case it didn't, I can now tell, what you want to do is you could put a market order at the close of that bullish candle if it was a bearish candle. Does that make sense? I might have to it's a pity I can't grab your screen, but okay, let's just keep it simple. We're going to just have the tap of the moving average. That's easy. We'll just do that. We won't make it too complicated.
Let me just touch on what you just said. So what you just pretty much said is like, hey, if we're looking for rejection on the retest of the moving average, assuming we're in a clear trend already and we can predefine that, then yeah, we want to see the rejection. That's what we would like to go for. That's the object of what we're trying to accomplish. So if there's a way, Cam, for you to program in and say like, hey, if it left a wick to the moving average and then closed like below it, in a downtrend, or above it in an uptrend, and then you can say after that point, we'll then enter. However, whatever language you want to use to code that into the software, into the EA algorithm or whatever, do that. I would recommend doing that because that's perfect, because then it prevents you from getting in trades like this right here, where it comes to the moving average, it tests it, but it does not leave a wick and does not close above the moving average. This ended up going sideways, would have resulted in a stop out if your stop loss was at this previous like fractal low that I'm assuming would be right there. However, Cam, very interesting enough, whenever price hits the level and leaves a wick at the level, for instance right here, and in this case the level is just the moving average, very simple, and it leaves a wick and closes above it, then yeah, at that point you could tell the EA to like say like, hey, once it does this and then it hits it and leaves a wick and closes above during an uptrend, then we'll enter the trade right there. Stop loss will be like below the previous structure, which will be that or this or whatever. That will be a way you could do that. So is that something you can code?
Yeah. Yep, we can do that. That's what I was trying to explain with our control of the mouse. So yeah, we can do that easily enough. That's pretty simple.
Right,
so I'll build that in, and then in terms of like take profit. So do you want to have a buffer on that stop loss? So is it going to sit exactly on that high, or is it going to sit a little bit further?
It should be clearly past it. And if I were you, I would just keep it very simple to start out testing the system. And I would test it with just a 1-to-1 risk reward, because keep this in mind. If the EA can just simply win a tiny amount more trades than it loses with this system, then it's profitable. Then you can start experimenting with like tighter stops and extended targets, maybe like a 1 to 1.5 risk reward ratio. And you can just start playing with it right there. But yeah, a buffer, I wouldn't put it just past the previous fractal high or low. I would put it clearly past, because the idea is that like, hey, price can come all the way up there and retest that level. And if it retests it, then it's still fine. For instance, if you would have taken a break and retest right there and then done your stop there with your stop above, this and that, whenever price came up there to like retest this level again, the spread right there could have pinned you out on that, which is why it's important to say like whenever you're trading structure points to like have it clearly past the level, because something like that's not even going to come close to hitting your stop losses. In this case, since we're using like the level is like the moving average, you want it to be clearly on the other side of that level, and it's probably going to be on the other side of that level if it's in a trend, if you put it clearly on the other side of the previous fractal low. That gives you enough distance from your stop loss, so that way you're not getting pinned out on like liquidity spikes or anything. And on top of that, since the risk to reward ratio is only 1-to-1, you're not trying to target like infinity. Like you're clear with like your stops, and you're clear with where your targets are at, and your targets are generally going to get hit a lot quicker if they're just a 1-to-1. So is there a way that you can set the EA to target 1 unit of gain for every 1 unit of risk?
Yeah. Yep. So that's easy enough to do. So I'll do that. And in terms of the stop, so we'll try and find the most recent high that you've got the arrow pointing at the moment, and then give it a bit of a buffer, which might be, I'm trying to think of like how you determine a buffer other than it being pips. It could be like like a sort of fraction of an ATR, which could be like 0.25 of an ATR. And we could play with that and see what it looks like.
Yeah. So if you're like taking the I'm assuming you mean average true range.
Yeah, average true range. Yeah, that's what it's called.
The thing is you'd have to take like this much, but honestly, I think you'd be good just setting it to like maybe like 5 or 10 pips past it. It's going to be kind of wide on some pairs, but it like for instance on GBP, JPY during London session, like 5 to 10 pips is going to be kind of close to the previous high or low. However, the previous high or low. However, if it's a pair like USD CHF, like 10 pips is like, more than enough room. So I don't know, but you can play around that. Like if you could like define within the algorithm, like, hey, what is this the true range we're looking at? And then a percentage of that would be like, yeah, whatever, like 5%. So the stop loss would go 5% above that, which would be like this right here. So be on the other side of that. I don't know. You can play around with that and test it. But I think in the name of simplicity, you should try to just like keep it so like, let's just say like 5 to 10 pips first, and then test it and see what tends to work well. Then you can start refining it if it starts looking good. Yeah.
And what timeframes would you recommend?
I would say let's do the 1 hour, because the 4 hour and daily are great for identifying the overall direction. However, the more recent trends may overpower the daily. And also with the daily, like you're going to be in trades longer, you're going to have swap fees and stuff. However, with the minute 1, minute 5 charts, those trends are so volatile. You can be in like 5 different trends over the course of a few hours in like the 1 minute chart. The 1 hour chart is kind of like that little sweet spot. I enjoy trading the 1 hour and 4 hour charts, but I think if we're using a system like this, the 1 hour chart's good because it's not too small to where you'll get pinned out on stop losses from liquidity spikes or get trends that are too volatile and hard to identify. But at the same time, you're not going to be like trading like daily trends and then you have like the lowered 1 hour trend go and take over that daily trend and end up spiking you out. I think the 1 hour is a really good time frame to be using for this. It probably sounds kind of perfect actually.
Nice, nice, nice. And what about currency pairs? Anything else? Anything you wouldn't want to trade this on?
I think the best way to like test it in any system in general is to start out with the most like liquid currency pairs, the ones that are most commonly traded. I trade currently, a lot of currency pairs. So like my watch list for Oanda that is linked here, I have these in Oanda. Regular watch list is like pretty much all of these. But if I were starting out, some of the most common, like most commonly traded pairs is right here, like USD JPY, Euro USD, GBP USD, GJ, gold, but gold is a metal. We might want to keep things simple by just focusing on FX pairs. So I would test it on maybe like the top 5 most commonly traded currency pairs, because with that, there's not going to be any weird stuff like ZAR pairs or like the Russian ruble or the Turkish lira, which can sometimes have liquidity spikes of like 100 pips or something stupid like that. I'd say the top 5 most commonly traded pairs. And then after you test those and get a baseline, maybe you can start expanding into the other currency pairs like New Zealand dollar CAD, New Zealand dollar JPY, pretty much all the other main out of the 26. So yeah,
Perfect.
that's how I'd start it.
Perfect. Well, I think. Look, I think we've got it. I think we've got a nice little system here. So we're going to do a moving average crossover. We're going to wait for some candles to, I suppose, a number of candles to stay under or above that moving average. Then we're waiting for it to come back and touch that moving average. After those candles have passed, we enter with a stop above a fractal, the most recent fractal high. And maybe I might even put a sort of buffer in that, so it's not like if the recent fractal high is 4 pips away, I might actually make it a little, like go for the next one. Yeah. And then after that, we have a buffer on the stop loss, 1-to-1, 1 hour chart, we're away. Very simple. Love it. Absolutely love it. Now, Nick, before I go off and build this, tell the guys what's the best way to get hold of you and a little bit about Mission FX. Right, guys, I thought I'd just interrupt this. So I've already made a start on this robot here. So you can see here, this is how I build them. So I use this tool called FX Dreamer. I teach people how to use it. So I've got specific strategies that I teach. You can see here, it's just drag and drop. You connect things, one thing to the other. I teach you how to use it. Basically, this has taken me about an hour to do the majority of Nick's strategy on the sell side anyway. I'm going to do the buy side and we'll probably play with a few settings as well. Guys, so if you are looking to build your own trading robots, head over there, tradingnut.com, look for robots, and I've got a 21-day course which teaches you exactly how to do this. And if you don't really know much about robots, then take my 14-day free trial. Okay, you're going to get to play with the robot, you're going to get to have a look at how it works, see if it's right for you. All right, folks, on with the rest of the show.
Yeah, so I guess I'll keep it simple. I teach a lot of stuff for free here on YouTube. My YouTube channel is Nick Shawn. If you just search my name on YouTube, you'll find a bunch of videos from me, Nick Shawn. My Instagram profile is also Nick Shawn FX. I don't get on there a ton, but I post a ton on there. But it's Nick Shawn FX. If you can see this really tiny trading view script, that's me right there. A great way to get in touch with me if you're looking for things like mentorship and stuff like that is support@missionfx.us. And then if you hit me at the support email, it's actually not me. It's one of my my support team who runs this email. The support team lead is Stefan. He'll respond to your email and he'll make sure you're taken care of. And if you have any questions, that way, if you have a question for me personally, you can get in touch with me there. But pretty much Mission FX is just sort of the platform that I've created to help people learn how to trade. I share a lot of stuff on YouTube for free. I have a paid program, but you're going to have to go through my free stuff anyway. So if I were you, I would just go and search me up on YouTube and watch a bunch of my YouTube videos. It's all for free and it's really helpful. And my trading system's not hard to figure out. So there's that. That'd be the best way you can get in touch with me and learn more about me and Mission FX.
Brilliant. Well, look, thank you very much, Nick, for coming on the show. Now, guys, do remember to subscribe to the channel for more videos like these and also the other videos that I shoot and the podcast as well. And do tick the little box select all so you get those notifications when these things go out. And guys, if you look below the video, we should have a little link for an offer on that Mission FX course. So if you guys do want to join up with Nick, then you can click that and get a wee discount. All right, folks, thank you very much, Nick. Hope you enjoyed the video, and we'll see you on the next one.